Good morning, lads, or good afternoon, evening, whenever you are watching this. I hope you're good, right? So, welcome to my YouTube channel, right? MSM Forex Trading Space. So, today I bring to you my outlook for price on Euro USD and GBP USD as of this midweek, right? As of Wednesday, 14 January 2026. So, usually during this midweek, that's when people are reckless, always prone and vulnerable to making the worst decisions, right? That leads to blowing and blowing, right? Of course, what's the worst thing in trading that isn't blowing your account? So I'm going to be giving you an outlook. I usually don't do this, but I felt like just giving you the outlook since price looks quite interesting at this moment, right? So without wasting much time, let's get into it. So basically, right now it's Wednesday, right? It's midweek, and the daily candle is just recently opened, right? It it's New York, 5 p.m. New York time, right? Eastern time, right? So at the end of an analysis, you need to have two things. You need to have a draw of liquidity, right? A draw of liquidity and a bias. How are these two things different? These things are different like this. A draw of liquidity, it's a horizontal line that you expect to be reached, right? It mustn't be random. It must be a certain level in price, right? Rather a key level, if you would say so, that you expect price to reach effectively, right? That's what a draw of liquidity is. It's very important. It's actually too important because it helps you understand market movements, right? Where is the market moving to next, right? So every time you are entering a position, right, when you reach execution, you must have draw of liquidity in mind. If you don't have a draw of liquidity, then you are dealing with the unknown. You're simply gambling. And how do you expect to make it gambling, right? Then we have bias. A bias is a high probability movement that you are expecting towards your what? Your draw of liquidity, right? Towards your draw of liquidity. So your biases will be in the form of your candle, right? Which is a monthly candle, weekly candle, daily candle, right? Or a session, an intraday session, right? It can be New York, bias, bullish, right? You're expecting maybe a New York OTE, then New York, for the rest of New York, it's bearish, right? That's also a bias. That's a high probability movement that you're anticipating. These definitions that I just gave you, write them down. If you did not listen, write them down, re-watch and write them down. I don't think you must now have a problem for draw of liquidity and bias after having such an understanding. That's absolute, right? There's nothing outside the brackets, nothing extra, right? So you need these two things at the end of your analysis. So at the end of your analysis, you need a draw of liquidity and a bias. But of course, I know that the hard part as well is coming up with these two things, right? The procedure is everything, right? And after succeeding in the procedure, that's when you move on to the second stage or probably last stage of trading, which is execution, right? That's where everything is decided, I know. Excuse me. So let's look at Euro USD right here on the daily. First of all, we have to come up with a draw of liquidity, right? How do we do so? you need to do an order flow analysis, right? An order flow analysis is a process of looking at the past order flow of the market. As you can see, this was the past order flow of the market, right? For the past many days, right? Many, maybe 20, 30, who knows how many days these are, right? Since Christmas, right? So price since then it was bearish all the way down. So basically price was bearish, right? But okay, we can prove that because price was rejecting highs and breaking lows. You can see all these bearish CRTs as price goes lower, and even the up close candles that got engulfed, you can see them propelling price. So this is a characteristic of a bearish algorithm, right? When price is respecting these up close candles that got engulfed and disrespecting the down close ones, which are usually responsible for sending the price what? The price upwards. So of course, if you want to be very mechanical, you could do the procedure and simply evaluate that the past price action was what? Was bearish. So using that in mind, you need to do a POS evaluation, which is a possible order flow shift analysis, right? Or evaluation, which is a process of coming up with your future order flow, right? This was the past. The past doesn't matter. Everyone on YouTube will say our price was creating higher highs, higher lows was, but exactly it was. But how does that determine the future? They can't explain that. So listen, first things first, you need to do a POS evaluation. How do you do a POS evaluation? A POS evaluation, you want to see if price is going to shift the order flow, which was bearish, to being bullish, right? Or price is going to continue being what? Being bearish. That's what goes on, right? In order to do that, I'm gonna be very vague and shallow, but at the same time, making things clear for you, right? I'm not gonna act stupid, right? I'm still going to be real with you, even though I can't spew everything in a single free YouTube video, right? I'm just trying to help those that are astute, right, and those who are engaged and intrigued, right. Those are the ones that I'm going to. Those are the ones that can be helped by this, right. So you need to start with a higher time frame order flow analysis, right? Which we already did on the weekly, and we evaluated. If you don't know, just go back to my latest outlook. I evaluated my weekly bias, right? And I was bullish. And if price is bullish on the weekly, then I'm less likely to see a continuation of this bearish order flow. That's number one. Then number two, you can see that we are coming off from a weekly key level, right? Which is this weekly order block. And this weekly order block suggests higher prices on the weekly, and on the daily you can see a CSD, a change in state of delivery, by the formation of this order block, right? And there's also an SMT, you can see right there. We also have a symmetrical, a smart money technique behind, right? A symmetrical difference, SMT, and many more reasons, right, for us to anticipate a true shift in what? In order flow. So my possible order flow shift analysis ends in actually anticipating for what? For a shift from price being bearish to being bullish. Same goes for GBP USD, right? Yep, GBP USD right here, you can see price was bearish, right? And price perched below this low, also creating that shift that we can notice on euro, right, after paging a low, even making this order block high probable, right, because it paged liquidity, right? Yeah. So we are anticipating a shift from bearish to what? To being bullish. Now, evaluating our draw of liquidity. How would we do that? We need to use that order flow we came up as a future anticipation. We came up with as a future anticipation to evaluate our draw of liquidity. So basically, when price is bullish, price is going to feel bullish internal range liquidity and purging external buy side liquidity. You get it? If you did not get that, then write that down. If price is bearish, then price has to fill in bearish internal range liquidity and go for the what? External sell side liquidity. That's how price moves. That is the fundamental framework of all price movements, right? To its most basic immaculate form, right? So there's no price movement that can ever be confusing to you if you understand that, right? So what I'm expecting of price is price to fill in internal range liquidity, which comes in the form of PDRAs, right? Order blocks, fair value gaps, etc., right? Then price goes for the what? For the heights. That is my bullish external range liquidity, which is that high right here on euro, right? It will be acting as my external range liquidity. So these are my first draws of liquidity. First, the short term, which is this order block. Then the external, which is in the direction of my what? My long term draw of liquidity. Literally. So in terms of coming up with a draw of liquidity, that becomes the what? The first objective, right? This is my internal and that is my external towards the long term direction, right? And you are also allowed to enlarge your draw of liquidity scope, right? By using dealing ranges, using order flow principles, right? Rejection of highs, breaking of lows, rejecting of lows, and breaking of highs. Those are the order flow principles that we look at, right? Also to evaluate where price is possibly going. So you can see that within a bearish dealing range, you need price every time for in order for price to create another bearish expansion. Like you need price to reach the 50% and possibly the what? The premium before price could possibly continue with such price action, right? That's how order flow, that's how dealing ranges work, right? So you can use that as an add-on to have conviction of price being headed towards the what? The buy side, which we talked of. So definitely, so this would act as your number one draw of liquidity, right? Draw of liquidity. So that is your long term, and this order block would act as your what? As your short term. Would act as your short term. But let's now look at GBP USD. What did GBP USD do? GBP USD was also bullish, quite bullish to be honest. GBP USD was bullish, and it filled this internal range liquidity yesterday and went for the external, which I labeled here, creating an SMT, which was not taken out right there. Right, we'll talk about this SMT, but not now exactly, right? Creating this what? This symmetrical difference. Right? And price remained bullish, right? So if on GBP I'm expecting price to continue, right, being bullish, then of course normally, right, I would be expecting it to probably reach somewhere like the 50% or maybe the rejection block before it can resume towards the what? Towards this new buy side, right? But I'm not gonna talk about that right now. But at least we have a clear resolution of where we're expecting price to move in the long term, which still remains that far end high right there, right? Far end high right there, and the short term being this what? This PDRA. That is my draw of liquidity matrix, right? Now, after I formed my draw of liquidity matrix, my third stage of analysis is now evaluating a bias and a draw of liquidity. Sorry, a bias, a directional bias in the direction of the draw of liquidity. So a bias is anticipating a high probability movement towards what? Towards a specific area, right? So in this case, it will be in the form of a daily candle. I'm trying to anticipate the occurrence of a high probability daily candle towards what? Towards a certain draw of liquidity. So how would I do that? I have to use all the concepts that I know, right? Me and my students know, right? And some of them, of course, which are key, it's using order flow and ceiling ranges, key levels, right? CRT, in order to evaluate the most high probable movement that I can get, right? So basically, since my direction is the buy side, since price has created this CSD, I'm expecting a high probable bullish candle towards the what? The external buy side liquidity, right? It's the most rational way I can ever be in evaluating a technical bias like that, right? So automatically, with that in mind, I would be what? Bullish for Wednesday, right? That's fine. Then there are also many add-ons that you can put, right? Such as market profiles, right? How do market profiles work? Market profiles, you're looking at Monday's conduct to recent key levels or key points, right? Because Monday is a range. So if Monday was a range and it contacted a key level, right? Then you're expecting an expansion towards the upside, right? So basically, yep, I'm expecting a bullish Wednesday candle in terms of that. That would be my bullish bias for Euro USD and GBP USD on the daily. But now, the last stage of my analysis, I really didn't want to talk about this, but this came of interest, right? And I thought I should share this, right? There's an important stage of your analysis that you must always have as an add-on, right? It changes everything. It's simply a revolution to trading, right? That is exception handling. What is exception handling? I'm not gonna talk much about it, but I'll try to explain as little as I can, right? Exception handling, it's a process whereby you are respecting and understanding where you're saying price is supposed to go, right? And we evaluated that price is supposed to be what? Moving towards that high, right? Moving towards that what? That high. Definitely, right? Price is supposed to do that. And exception handling is a process of understanding, right? That even though price is supposed to be moved towards that high, there are exceptions that can happen, right? that can cause a movement that is against that direction which you're expecting, right? And that movement is short term, right? It can happen for a short time, opposing the true movement, right? So you have to understand that, then you have to check for that. There are many ways to check, right? But I'm just gonna spit a few which I can currently see, right? So you can see that we are being moved towards this that long-term growth liquidity. But at the same time, yesterday, what happened? There was CPI, a lot of things happened, and price made an SMT at a key level, right? With a weekly rejection blow, right here on right here on GBP USD, right? And price made the high of the week with an SMT on a Tuesday, which is the highest probability of printing the weekly high, right? So this means that, along other reasons which I'm not gonna really talk of, this means that we have an exception that we are looking at, right? This is when, guys, you say that my bias is bullish, right? And you are right. You say, yeah, I did everything I was told, right? I did my order flow analysis, I did everything. But you see price dump. And as you try to buy, you're going to try and buy everywhere, right? Until you blow your what? Your account. You see, because you don't know how to handle exceptions. Imagine exceptions, the handling of exceptions in a setting of programming, right? Programmers, they may program like a calculator, right? You know how a calculator functions. It's just this. It's designed to do proper, normal mathematical calculations. But what if someone divides a number by zero? How can a calculation come out of that when someone divides a number by zero? It's impossible, right? But they handle such an exception, such that the calculator can just tell you that there's an error, right? Try again. So this is also the market communicating, right, with you, right? Of course, your system is designed to work properly, to work straightforward, right? Anticipating normal bias, normal draw of liquidity and price to move towards those draws of liquidity, but there are also exceptions that the market can come up with, which you must what? Account for. And being able to account for an exception means that you're either going to stay away from the market until that short-term movement is ended, or you are going to use that exception as an edge, right? Right? Or you just stay away from the market until the short-term movement ends, right? But never keep on saying my bias is bullish, right? Only until price is what? Is confirmed that this short-term movement is over. And how do you confirm that? On the weekly, of course, price had reached this okay, I'm not gonna talk about that, but if you want to confirm when the exception has ended, just wait for an SMT, asymmetrical difference, right? And right now we have one with GBP USD right there down here, right? Price, you can see right here that it was not breached, and more, right? And an SMT, there's what makes an SMT valid and invalid. Do your research on that, right? If it's made at a key time, at a key level, then it's valid. If there's a key level but no key time, right? It might not be key, right? So keep that in mind always. So be aware today, right? Not to try to harshly just try to buy, right? Wait for the exception to end, right? Or try to get confirmation in the direction of the exception until it ends, then you start buying. Personally, I'm expecting that price might move towards this low to break the previous week's low because we have an FVG existing below it, right? With an FVG on the weekly time frame right here. So I believe that there's a high probability that price might bridge the first week of January before price could actually go up. So I'm expecting that if price reaches down there, then bridges this low, then this exception would have ended, right? But that's what I wanted to say. Same goes for GBUSD. You can see that this is actually CRT formation in the presence of a weekly key level on the left, the rejection block. So in order for me to have conviction that the exception has ended, price simply has to bridge below the CRT low like that. Then I start being bullish and price to hopefully, hope is not a strategy, but of course, it's not a strategy when you have already entered a trade, but it's a strategy that works in your analysis, right? It helps you not fall for things easily, right? So I'd hope for price to possibly even reach this main threshold, right, of this jump close candle, right? It might actually propel the market upwards. But then let's look at DXY. DXY. You can see that this same low is that same high right there, right? And this other high which is on top is the FVG which I was talking about. You really need to be astute for you to see this. That's FVG, right? So if you are astute, you should see that price might not even purge this low on euro, right? Which is the same low on GU, but rather DXY is most likely to purge this high, right? Leaving this low unpurged, right? Which is symmetrically the same thing, forming a what? An SMT at some point. Then once that SMT is formed, you buy, right? That's how it works. So yeah, this was quite advanced. If you're confused, I don't blame you, right? But I'm just trying to rewatch and understand what I'm saying. Then if we move on to the 4-hour, okay, just gonna remove that, but keep this and keep that. If you move on to the 4-hour, of course, price isn't reached. So what you're supposed to do on DXY is just put an alert at this point, right? You can just say out A. Sorry. Out A. Create an alert at that point, such that when it's reached, you know that price is now the mandate to what? To shift its exception. Now, what am I expecting? Before that SMT happens, I'm actually bearish. So this is the order block that I'll be looking at right there to possibly anticipate a continuation to the downside, right? Like that. So this, if I get a proper confirmation, proper context, I'll be selling off from there, right? SMT key level. Then right here I actually have a breaker, right? I have an FVG and a breaker right there. Right there. My CRT will be the same, 9 p.m. candle, right? Until the SMT happens, I'll be the what? I'll be bullish. I'll be bearish, sorry. So I'll be avoiding buys today. That is my what? That is my analysis. So this ended up as a 30-minute video. You can see that I was just talking and talking and and analyzing. You see how it's hard to even share a lot of things in just a small video, right? And I think you can even sense that there's still a lot more I could even emphasize, but it's simply impossible, right? No matter it's Romeo, no matter it's who, to share everything in one little video, right? So if you're interested in learning the way I trade, right? If you are interested in using the system that I use to trade, my system of ICT plus CRT and Turtle Soup, you can hit me up, right, on via my WhatsApp group, which I'll leave the link in the description box. So yeah, you know what to do. I'm not gonna emphasize so much, right? It's the only way you can be helped, right? Learning. So with that said, I hope this video was of use, great use to you, and I wish you a profitable rest of the week. And if you found this video insightful, please leave a like, leave a subscribe, put your notification bell on so that you never miss one of these. So what I dropped today, it was really critical. To be honest with you, the rabbit hole goes deeper than you think, but yeah, I could just share some of it. So if you're my student, then you should know most of the stuff I was talking about, and pretty much everything, to be honest. And you should just use what I was talking about as conviction, right? Just to strengthen the understanding that you already have, right, with a bit of application which I was giving. So with that said, I wish you the best of luck, ladies and gentlemen. Thank you.